Okay, I hope you can understand now. So it means if whatever you have inputted, does it produce the same? There most time is no. So the 20 kg must be accounted for as a waste. But I like the way lab processors deals with these issues. Lab processors, if they process something, they don't have waste. Remember soya, if you process soya, whatever comes out, some people throw it away, but lab processors will make feed from that. Or soya beans, when they're using soya beans, their aim is to produce oil. The waste can be used to also as a chicken feed. So it means that's how you have managed your waste. So we should learn on how we should manage our waste. For instance, in terms of maize, our waste is maize bran or beer. How do you account for that? You can sell it and make money. That's what we are looking at. So as accountants, how do you deal with waste? That's what should be in your mind from now on. Then flow cost accounting. So flow cost accounting, in simple terms, it looks at an individual quantity or item in stages. For instance, if you have materials, you have bought, for example, maize, for instance. So in that maize, you have to look at how much did I buy with maize, how much does it weigh, who is going to deliver this material, and who is going to sell. That is flow cost accounting. So flow cost account, you look at the stages of that item in detail. Okay, for his understanding, let's look at accounting. Right? If you have got an invoice, or if you have sold goods, what do you expect? You expect an order, you expect an invoice, you expect delivery, and then you expect receipt. That is flow cost accounting. So it shows the movement of every item which can affect the environment from the initiation to the end. So for example, here we have given an example, or we have defined in terms of an environmental product. So we have said it will show the quantities of materials involved. So we have bought the material, their cost and their value. Then what we're going to do is we're going to divide this material into three categories. One, the actual material that we have, maybe maize. Number two, the systems that will be taken, maybe buying, invoicing, recording, all those. And delivery, we need to show delivery, how are we delivering the product, and finally, the disposal itself. That is flow cost accounting. Now, what's the aim of flow cost accounting? The aim of flow cost accounting is to reduce the quantity of material which, as well as having a positive effect on the environment. So should reduce the quantities of material. Remember, if you reduce quantity, you save space, you also save wastage. Alright, so if we save wastage, then it means we're going to manage our environment. That's the second one, flow cost accounting. Then let's move on to activity-based costing. Okay, so activity-based costing, what it says is this: if you have got several costs which affect the environment, you should identify why those costs are taking place. For example, if you have got high pollution, you need to identify what is the cause of high pollution. So you say maybe we use maybe charcoal, or we burn down forest. That's the cause. If you have got lower rainfall, for example, what would be the cause of lower rainfall? Maybe we have got no trees. So I'm trying to, in activity-based costing, we are trying to link the cost, the environmental cost which you have, to the causes of that cost. That's activity-based costing. So activity-based costing, in simple terms, is trying to allocate the environmental cost to what caused them. That's the simple definition. Based on the book, we can say how we allocate our internal cost to cost centers and cost drivers on the basis of the activities that give rise to those costs. So other issues we should consider in activity-based costing are that in environmental accounting, we are going to distinguish between environmental related costs, costs which are directly related to the environment, and these products can either be attributed jointly to cost centers, and they can also be environmental driven. One good example of joint costs: sugarcane. Right? If you are processing sugarcane, you expect to produce sugar, and you also expect to produce ethanol. So those are joint costs. But we can also have driven costs. Driven costs are those costs which operate in isolation, and also they occur because of the environment impact, and they don't depend on any other cost. For example, if you cut down trees, what do you expect? You expect no rainfall, for instance. Then lastly, we have life cycle costing, and we know life cycle costing. We are trying to accumulate the cost of the product over the entire life of the product, or we are trying to look at the cost of the product on how it affects the product over the entire life. So life cycle costing in terms of environment, we should look at the full environmental consequences. What we mean is on introduction, what are the consequences? You say we are polluting the environment, or we are spilling water. Then on the growth stage, you ask yourself, what's happening on the growth stage? Maybe on the growth stage, we have more green costs. For example, we throw in the papers unnecessarily. That's the second part. Then now under maturity stage, what costs do we suffer? Maybe we advertise a lot. We still incur more stationery. So at each and every stage, you have to explain the costs incurred. Now, take note, we just focus on introduction to growth stage. So those are 4 stages of environmental management. And this has been, I think on the past paper, this has been the most examined area. Finally, what are the advantages and disadvantages of environmental costing? The advantage is that there is better or fair product cost. So you know the product cost which you have, and you find ways on how you can save them. You can also control the environment, so easy to control the environment, and also it will help you to quantify the savings for environmental friendly measures. For instance, if you say we want to reduce carbon emission by 20%, it will help you know how you have reduced the environment by 20%. And finally, it helps to integrate environmental costing into the strategic management process. So it helps senior management to incorporate these costs in their reports. However, challenges could be time consuming, so there's a lot of effort involved in trying to deal with environmental costs. And there's also a challenge when you're trying to determine accurate costs and appropriate cost drivers. To say this cost is caused by this is very difficult. For example, pollution, you cannot know which product is polluting the environment sometimes if you have got several products. It's difficult to implement because people say this is a waste of time, let's just ignore it. A company which is very serious into its environmental management can also be at competitive disadvantage to its rivals who do not do this. Why? What do we mean? If you are more of environmental costs, you expect to make losses. Maybe you are trying to sponsor other organizations, you are trying to clean up the environment, you find that you are spending millions just to clean up the environment. Okay, so that's the last topic on specialist cost and management accounting techniques. So I think for a few minutes before we go, maybe for 20 minutes, we should just look at some few questions and we practice them. So I'll open the kits.